Hi all, welcome back. Just going to touch on how the week ended up last week. Obviously, we touched base last Wednesday, so we're just going to see what panned out over the closing days, and touch on what's ahead for this week. Obviously, it's a pretty heavy week in terms of data that's being released out of the US, so it's going to be interesting, and we're going to see what's happened today. So let's get into it. Money market here. So look, at the end of the day, at the end of the week, we did see continued expectation of rate rises. We saw yields continue to climb. Equity markets were soggy around the world. We saw numerous Fed speakers come out and speak willingly of their intentions to continue to raise rates, and that saw those markets in the US peak, the terminal rate to peak at around 4.5%, which was a big increase from what was being priced in at the start of the year. So we saw pretty decent moves in bond yields, and it closed out the month February as a pretty dire one for most markets around the world. Equities were off quite a bit, yields were up, and currencies have come off considerably, especially the Aussie dollar since their highs are in January, mainly to do with a strengthening US dollar. However, Friday greeted investors with some better news after what we saw throughout the week. Did see even European bond yields rocket up as their inflation continues to be very stoic and very sticky. However, we saw some PMI numbers out of the US and ISM PMI manufacturing numbers come in a little bit lower than survey, and that's seen a bit as a continued downward trend. I can see here that it's continued to fall, but it came out at 47.3, and that was a little bit under estimates. If you can go back and just have a look came out at the end of Friday night for the rest of the market. So that was a little bit lower, which was that came out lower, as did the ISM manufacturing data. So equities rallied on that news. It was a bit of a relief after a week of pretty torrid data and really not much positivity in sight, even though this is, bad news is good news in these times. But even though this was weak data, was encouraging for the equities market as counterintuitive as it seems. So that's how the week ended. So a positive night to close out the week nonetheless at the start of March. So I think all the attention now turns towards the US this week and Australia. We've got the cash rate tomorrow, so it's expected that there will be a 25 basis point hike again. It's going to be critical to decipher what the board is thinking in for upcoming meetings. It's going to be interesting to hear their commentary surrounding it, just taking into account the inflation data we saw from Australia and GDP last week. There are signs that our economy is starting to slow somewhat, and that's partly due to our mortgage structure in our economy. There's a massive amount of mortgages that are about to roll off their fixed rate structure, so that could be behind some of the moves and some of the slowdown we're starting to see around the economy. Nonetheless, inflation still is at a pretty high level, so we'll wait to see what happens there. In the US, we've got Jerome Powell speaking throughout the week. That's going to be closely monitored. We've got JOLTS openings later on in the week, and we also have non-farm payrolls, which is historically a massive event on the calendar, and it has been throughout this cycle in the economy. So obviously that was a catalyst back last month when we saw that monster read. That's what really sparked the whole sell-off in assets and securities since then, and we haven't really seen any form of data to turn the market's opinion around. So we'll wait and see what happens there. But they're obviously, survey predicts 215,000 new jobs coming in. So it's going to be interesting to see how that ties in with not only jobless claims, but the amount of job openings there are in the economy and the ratio to openings versus, people looking for work and new jobs created. So, look, I can't see many massive moves leading into that. I think there's a little bit of rebalancing this week and taking profit before this risk event occurs. So we'll wait and see. You can see the NASDAQ, it recovered a bit, finished the week up about 2%. Decent night on Friday following the flattish sort of session. So bit of reprieve there for investors. US dollar came off over the last two sessions, continued downward today. So yeah, a little bit of rebalancing there. We can see it peaking quite get above that resistance of 105 throughout the week. Another thing we saw on Friday was that China has unveiled lowest growth target, I beg your pardon, in more than a quarter of a century. So the government's seeking about 5% GDP rise this year, and this is amid trade and real estate woes. To me, it's understandable. There's going to be a considerable pullback in fiscal stimulus and spending in the economy due to the global economic conditions we're seeing, and it's going to be hard to warrant a huge fiscal package and stimulus in the Chinese economy when the performance of that economy is derived by global demand. And we're seeing a pretty decent slowdown around the world. And for China to be able to capitalise on high growth, the rest of the world, such as North America, Australia, and Europe, need to be spending and need to have a healthy appetite and demand, which we're just not going to see this year. So yeah, China, they're a little bit hamstrung, but they're making do with what they can. The Aussie dollar came off a little bit today as a result of that. It's currently trading at 67.40, which in a pretty tight range throughout the last week, really. Hasn't gone too far. RBA tomorrow could change that. However, we'll wait and see. 3-year Treasury yield in the US peaked up at around 4.67%, historical highs, since corrected and come off a bit down to 4.5%, dropped off again further today. So look, I think the market will once again be pretty tentative until at the end of the week at least. I think that non-farm number will be the crescendo for the week. WTI picking upwards, decent spike on the end of the week after some data regarding inventories and stockpiles around the world. Basically unchanged for today, trading at about $79 a barrel. We could just have a look at what's happened today on the broader market. Look, as we can see over here, ASX about 0.6%. Of Asia, pretty good day of trade this session. That's following on from a decent run on Wall Street on Friday night. Hang Seng there is up 0.12%, and the Nikkei, a very good gain. So keeping in mind, Friday, the BOJ is coming out with their policy decision. I will touch more on that. We'll touch upon that later in the week. Yields were down marginally lower again for US opens for trade tonight. Australian yields dipped. That larger chunk of losses in the yield was gapped down lower after the American yields fell. Currencies, US dollar was strong again, but look, broadly holding its ground there. It's unchanged basically. Aussie dollar is lower as well. The Chinese yuan, that's directly to do with the Chinese growth target being lower than consensus. Across the board everywhere else, it's looking unchanged. Lot to report really. So look, we'll leave it there. We'll turn our attention to this week's events. We'll touch on the RBA when that comes to hand tomorrow, and we'll wait and see. But it's going to be a pivotal week for the markets, and I think we'll get a pretty good idea of what's going to happen after the week is over. So yeah, it's interesting to see how it pans out. All right, thanks all once again, and we'll touch base again at a later date.